Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 15th of July. Let's dive into the week's stock market news. European markets rally on lower US inflation. UK economy rebounds. European markets experienced a broad-based rally as investors cheered lower than expected US inflation figures. The Pan-European Stocks Europe 600 index climbed 1.45% for the week, with major indexes like France's CAC 40, Italy's FTSE MIB, and Germany's DAX all posting gains. Bond yields across France and Germany fell in line with US Treasury yields, reflecting the easing inflation concerns. However, UK gilt yields rose slightly at the short end of the curve as unexpectedly strong economic growth in May raised doubts about the Bank of England's willingness to ease monetary policy. In the UK, gross domestic product rebounded in May, expanding 0.4% sequentially and 0.9% over a three-month period, marking the fastest growth since 2022. The growth was fueled by a resurgence in services and construction output. Despite the positive economic data, three Bank of England policymakers expressed their reluctance to support a rate cut, causing markets to reassess expectations of a policy easing at the upcoming August meeting. Meanwhile, the euro area saw signs of accelerating wage growth, with online jobs platform Indeed reporting a year-over-year increase of 4.20% in salaries for job openings in June. This could potentially impact the European Central Bank's policy decisions. In political news, France's parliamentary election resulted in a hung parliament, with no party securing an outright majority. This sets the stage for complex negotiations to form a coalition government. Now our insight into alternative markets, liquid currents. The evolution of private markets towards liquidity and flexibility. The private markets are experiencing a significant shift towards liquidity, driven by increasing demands from limited partners for distributions and the need for firms to buy time and complete turnarounds. This emerging trend is reshaping the landscape of private equity, venture capital, and private debt, prompting the development of innovative liquidity-focused solutions and more flexible fund structures. In recent times, the private markets have witnessed a surge in limited partners' demands for distributions. This is partly due to macroeconomic factors and their impact on deal activity, leading investors to seek faster access to their capital. According to a Q1 2024 survey by Private Equity Wire, 61% of general partners have experienced increased limited partners' demands for distributions in the past year. To address this growing need for liquidity, various solutions have emerged in the private markets. The secondaries market, particularly for limited partners-led transactions, has seen remarkable growth, with Bain & Company reporting a 92% increase in capital raised in 2023 compared to 2022. Borrowing against net asset value has also become an increasingly popular strategy among GPs, with 26% of firms utilizing this approach in the past year. In addition to these short-term liquidity solutions, the private markets are witnessing a broader shift towards more flexible fund structures. Evergreen funds, multi-strategy funds, and open-ended funds are gaining traction, offering limited partners greater liquidity and flexibility compared to traditional closed-ended structures. These innovative fund structures are designed to better align the interests of GPS and LPs, providing investors with more frequent opportunities to access their capital while allowing general partners to maintain long-term investment horizons. However, the long-term feasibility and sustainability of these structures remain to be seen, as they require careful management and a thorough understanding of the risks involved. The ongoing focus on liquidity in the private markets is likely to have far-reaching implications for the industry. The rise of private wealth as a significant source of capital, and the potential gradual retailization of private market asset classes could further accelerate this trend. As the demand for liquidity continues to intensify, we can expect to see further innovation in fund structures and investment strategies. The ability to offer liquidity and flexibility will become increasingly important for general partners seeking to attract and retain investors in the evolving private markets landscape. The shift towards liquidity marks a new chapter in the evolution of private markets. While the long-term impact of this trend remains uncertain, it is clear that liquidity and flexibility will play a crucial role in shaping the future of the industry.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.